As we're looking ahead to 2021, there are strong trends emerging in the world of digital. I looked at the global impact of AI on labor markets during the pandemic, and also at surveys, reading the minds of boards and CFOs as they set the digital goals for their companies. In this second edition of Looking Ahead, I will be discussing the longer-term shifts of digital investments and how to prepare for them. So let's start with the big picture. With two big global shifts in investments and priorities due to the pandemic. The first, in the World Economic Forum's latest survey on the future of work, points to the big digital shifts in the workforce. This is probably not a surprise. The continued global competition forces companies to implement more efficient processes and use digital technologies like AI and automation for both revenue growth and cost containment. As AI gets smarter, more and more jobs can be augmented or replaced with bots. The WEF expects a lot more investments in digital and online training tools at a massive scale as businesses and governments retrain workers for the new digital future. All kinds of learning and collaboration tools will benefit from this. The second big trend is the increasing shift to Asia. I was invited to a virtual Asian PE conference, courtesy of AVCJ. There are tectonic shifts in Asia that will further shape digital transformation in the US and Europe. Asian economies recovered from COVID disruption much faster. China in the third quarter grew 3 to 4%, while Europe is down, I think, 6%. The US economy shrunk by 3%. Asia just formed the world's largest trading bloc called RCEP that has twice as many people as the European Union and NAFTA combined, covering 2 billion citizens. More importantly, the GDP of the countries in the RCEP exceed both the European Union and NAFTA, so it will be a big player globally. I hope they change the name from RCEP. It's tough. With this development, Asia also started to trade more within the region in 2020, as trading with the US and Europe is much less profitable now due to trade sanctions and tariffs. It is also expected that a lot more of the digital innovation will come now from Asia. Private equity investors talk about the radical shift of investments from the 2 C's, consumer and concrete, real estate, to the old digital 6 C's, commerce, cloud, cybersecurity, cashless, fintech, connectivity like 5G, and collaboration. China is already a world leader in at least 2 of the C's, cashless and e-commerce. For example, in cashless payments, Alipay processes the equivalent of 60% of China's GDP in cashless payments. And Aliyun, the largest cloud provider, is probably going to become a global player, at least a Pan-Asian one. Both part of Alibaba Group. And while the Chinese companies are familiar with the Western innovations of Zoom, PayPal, and AWS, the opposite is not true. Most Western companies do not know the digital giants of China like DingTalk, Woof, both Zoom competitors, or Alipay, the largest digital payment system in the world. So for now, Asian innovation is mostly invisible in the West, but that started to change with the AI platforms in the likes of TikTok. The new trade bloc will allow the digital leaders of the region like China, Korea, and Japan to expand and monetize innovation at a scale that's frankly not available in Europe or in the US. PE firms at the conference pointed out that the 5 years of innovation happened in just 5 months during the pandemic, especially in digital, which is similar to the trend that we have seen in the West. Due to the economic growth, there will be a massive expansion of the middle class in Asia at the same time that the middle class faces new economic difficulties in the US and Europe. Digital technology tends to thrive where the economy thrives. And for the next couple of years, at least, the consensus is that growth will be in Asia. Well, let's bring it closer to home. A series of surveys from Deloitte, McKinsey, BDO, and others asked boards and CFOs about their digital focus for 2021. Given the Western economies are mostly in a recovery mode, there is a general focus on preserving cash and preventing revenue leakage. Most of the CFOs who responded were still in cost-cutting mode. Despite the defensive stance, though, 65% expected more investment in automation and general process efficiencies. In a Baker McKenzie report, they pointed out that this digital investment is uneven. Certain sectors are overinvesting, like consumer, tech, and financials, while others are falling behind. A PwC study pointed out that digital leaders invested 33% more than their peers in digital programs and had close to 20% higher profit margins. Similar results were found in reports from the London School of Economics and KPMG. There seems to be a 15-20% segment of business that are clearly getting ahead of the pack as we speak, accelerating their digital models and their benefits. The KPMG survey found that double-digit percentage point gap exists between the digital leaders and the laggards in 2020 in 4 areas: customer satisfaction, employee engagement, time to market, and operational efficiency. As McKinsey's latest State of the AI report pointed out, in times like these, the winners will decisively break away. They found that 66% of the leading companies saw revenue growth due to AI and automation, and 40% drove cost efficiencies using digital tech. Lastly, a Dell survey found that almost 80% of the companies fast-tracked their digital programs and are trying to reinvent their entire business model. And we all know that companies with increasing margin and cash flow will win. That's just the physics of business. I know. I rattled off a lot of stats at you. But the amount of changes that are happening right now in the structure of global business is staggering. Most global companies are seeing it, but companies that only focus on their local markets in the US or Europe may miss the trends completely. As digital value creators, we can shape the business models that are in place and help companies and our colleagues prepare for the changes ahead. Not everything is in our control, but there are 2 safe bets. Number 1, training the workforce in digital technologies will make their skills more valuable and the company more impactful. And 2, accelerating digital business models and technologies seems to be the current battleground. And if we trust the surveys, 15% of the companies will win that digital battle. And they will win big. Talk soon.